If I just use the log regression channel of Bitcoin and just project out the growth rates of crypto versus the internet and assume it slows down massively from here, it gets to $100 trillion by about 2032. Now, $100 trillion, we throw around numbers like 100 trillion. You've got to understand $100 trillion, we're creating $97.5 trillion of new wealth. That is the most.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Raoul Pal, the CEO of Real Vision, provides insights on why it may be beneficial to shift our focus away from current concerns. Invest strategically in key cryptocurrencies to maximize returns. The individual mentioned that the majority of their liquid net worth is currently invested in Solana, with some investments previously held in Ethereum and a small amount in Bitcoin. This does not indicate a dislike for Bitcoin, but rather a belief in the greater potential for appreciation in assets like Solana at this time. The individual also noted that the cryptocurrency community is heavily influenced by emotions, driven by both fear and greed. While people are afraid of potential setbacks, they are also eager to make profitable decisions. However, the individual suggests adopting a long-term perspective, similar to Jeff Bezos' approach of holding onto his stock regardless of business cycles. The implication is that instead of getting caught up in market cycles, investors should focus on the long-term potential of their investments. In other news, an article was published by CoinDesk discussing investors who took advantage of the market dip on Friday following the July 4th break. Upon their return, traders were met with the news that the price of Bitcoin had experienced a significant drop of over 10%. From nearly $61,000 on Wednesday, it fell below $54,000 early Friday. In response to this decline, investors showed their confidence in Bitcoin by buying into Bitcoin exchange-traded funds. This led to substantial inflows of $43.19 FR on Friday, marking the highest level of inflows in at least 2 weeks. Notably, Fidelity's Wise Origin played a significant role in this. Bitcoin's fund has managed to attract an impressive $7.4 million of net new money. Other ETFs that experienced net inflows included the Bitwise Bitcoin ETF. The ARK21 shares Bitcoin ETF and the Vanek Bitcoin Trust. With that being said, and lots of things Raoul Pal discusses, so please watch the video to end, and share this video, and subscribe our channel, Everyday Finance. Thanks.
Now we've got the business cycle and liquidity cycle completely dominating everything. And people don't want it to be that easy. They don't want it to be that easy. They love complexity because it makes people sound smart. Simplicity, they think is stupid. But the simplicity seems to work extremely well. You know, that whole bell curve meme, you're better to be on the left side, which is number go up. The right side of that is number go up as well. And that's because you understand all of the mechanism that's at play. Everybody in the middle of the bell curve is arguing why the market's going to crash, why everybody's going to go to war, why money printing doesn't lead to liquidity that gets into the system, why the plumbing doesn't make that happen, all of the stuff that we get. But the number go up. And, you know, I just think it's a very, very powerful force that people don't want to believe because it questions their belief system. Because most people actually, a lot of people love to see stock market crashes. It's like this weird thing. The adoption curve completed, you need to be at like 4 billion people. So right now, crypto as an asset class is $2.5 trillion. If I just use the log regression channel of Bitcoin and just project out the growth rates of crypto versus the internet and assume it slows down massively from here, it gets to $100 trillion by about 2032. Now, $100 trillion, we throw around numbers like 100 trillion. You've got to understand $100 trillion, we're creating $97.5 trillion of new wealth. That is the largest generation of wealth in the shortest period of time in all recorded human history. When you understand that the S&P 500 is a $50 trillion market cap, and that took 100 years of value accretion by the US economy and those companies, this is double that. We've never seen anything like it. So it's an extraordinary opportunity. Now, of that 100 trillion, will Bitcoin be 50% dominant in that market? No. Because to get to 100 trillion, we have to be using the whole blockchain infrastructure for things like the finance system, for Web2 businesses, for all of the other elements, not just the moneyness element or the store of wealth element that Bitcoin has. So if the world were 100 trillion, what is the value of Bitcoin in that? Maybe it's 20 trillion. Maybe it's 15 trillion, whatever that number is. So it's the overall space that's going to see the growth.
On July 6th, Bitcoin experienced a significant rebound of 6.4%, reaching a price of $56,900 after hitting a 5-month low. Yesterday's recovery suggests that traders are starting to overcome the negative effects of recent events, such as Gao's 8 billion BTC reimbursement and the BTC sell-offs by the US and German governments. Prominent crypto analysts and influencers have been downplaying the impact of these events on Bitcoin's long-term bullish outlook. They argue that the governments only control a small portion of the total Bitcoin market, which has seen a significant inflow of $225 billion since 2023. In other words, the market has enough liquidity to absorb government-led sell-offs, even amidst concerns that the German government may sell the remainder of its Bitcoin holdings, about 42,000 BTC as of July 6th, in the near future. Similarly, an independent market analyst shares this sentiment. Trader Tardigrade compares the recent sell-off in the Bitcoin market to previous unexpected events that caused sharp rebounds and extended bull cycles. The analyst points out similar patterns in 2016, 2020, and predicts a similar trend in 2024. In 2020, there was a fake out below the trend line, but once it reclaimed above, a bull run followed. According to Capital, the recent sell-off in the Bitcoin market is a normal occurrence that follows a Bitcoin having event in this proof-of-stake system. Observing patterns, Bitcoin frequently undergoes substantial price declines over the course of several months as the market adapts to new supply dynamics. However, as the decreased supply starts to affect the market, the price gradually rebounds and often enters a robust upward trend. This is primarily driven by the combination of lower supply and increased demand, which pushes prices higher. Let's back to the Raoul Pal interview.
If it is the fastest accumulation of wealth in all history, it will attract all sorts of people. Now, when you talk about the gold rush in California, there was these wildcat miners, there was the scams, the crooks. We see it in the oil and gas business. We see it in the gold business. We see it on the internet everywhere. The Nigerian prince scam is just because the internet allows money to move more freely. So of course we're going to see it in this space. And it's very difficult to avoid it. Whenever there's a large increase in money available, you get criminality. We saw that in Russia after the Iron Curtain came down. We see it in China. We see it everywhere where there's access to new money, it has bad actors. That's always the case. And that's what regulation needs to be for. That's what, we need to get better about dealing with. We're just so far behind being able to deal with these kinds of people so far. But the great thing, so I'll think about there's two layers to crypto. There's the blockchain and the tokens themselves. So the blockchain, incredibly useful for proving who's real and who's not. We've seen Sam Altman start WorldCoin. This is based on this premise, is like, you won't know who's an AI and who's not. And blockchain, being an immutable ledger, is a very good way of doing it. It's a way of proving humanity or proving AI or whatever it may be. So I think that's a very big deal. We will all have a digital identity that will be on blockchain to prove that we're human. The other side is AI is moving to a world called agents. AI agents are sub-AIs that do work. Now, hey, build me a deck, edit this video, do this for me, do this expert piece of knowledge. It's much like going on to Fiverr or something like that and paying people to do that work. These agents that get built either by AI themselves or by other people, well, AI is not free. There's compute and electricity. So how do they charge? And many of these will want to make a profit. So how do they charge? Well, last time I checked, AI doesn't have a bank account. Well, it can't. It hasn't got a driving license. It doesn't have a proof of address. How's it ever going to get a bank account? It can't. Also, because of the payments are micro in both time and price for these small acts, the entire system of money doesn't work for it. It's too slow. It's not small enough. It's not fast enough. So blockchain is cryptocurrency is the obvious answer of how agents to agents work. And as you say, they don't care about the UX, but what you have is an immutable ledger of the transactions. So that's where I think the big use case is machines will use digital money. Of course they will.
Bitcoin experiences a rapid rebound. Today, we observe the US stock markets rallying to a record high in the aftermath of a holiday. During a session with low trading volume, the S&P 500 achieved its 34th record high of the year. Equities bounced back after a period of volatility, which was triggered by data indicating a slowdown in US hiring and the highest jobless rate since 2021 due to disappointing jobs data. According to recent predictions from Wall Street, there is now a higher likelihood of a rate cut in September, with the probability increasing to 72% from 55.4% a month ago. Rate cuts usually have a positive impact on Bitcoin and other riskier assets as they lower the opportunity cost of holding lower-yielding US assets. Consider Treasury notes, for example. Bitcoin exchange-traded funds, ETF, have experienced a consistent outflow of $43.19. The price of Bitcoin has seen a notable recovery, coinciding with a significant increase in its funding rates in the futures market. Interestingly, despite a significant decline in open interest, Bitcoin futures funding rate has risen to 0.78% per week, up from 0.044% per week just 2 days ago. In the same period, the total number of unsettled contracts reflected by the OI has dropped to around $28 billion from $31.64 billion. In summary, traders are expressing strong confidence in the upward price movement and are willing to pay higher rates to maintain their long positions. Bitcoin's lower open interest and higher funding rates suggest a period where less experienced investors are selling off their positions, while more experienced traders or institutions are holding or even increasing their exposure in anticipation of a price rise. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.